expectations are very high for President Trump. Pro-growth policies, cutting back on regulation, wanting to drive the price of energy down by half, and so forth. The problem, I think, Kerry, is that expectations are likely to be disappointed for a period of time because all those things may have great value longer term, but it's going to take time to actually make progress, get them to be operational, if you will, in the real world.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. This is Financial Survival Network. You're listening to your host here, Kerry Lutz, and we're at the first week of the month, literally, and we've got Jim Welsh on from macrotides.com. Got a question for Jim, myself. Shoot me an email, kl@kerrylutz.com. Jim, hey, welcome back. Happy New Year. What can we look forward to in this new era?
Well, Kerry, great to be joining you. Happy New Year to you and all your listeners. And I'd like to offer the January issue of Macro Tides. All they have to do is send me an email, jimwelshmacro@gmail, and I'm happy to send that out to them because it does address some of the things we're going to be talking about and more. So I think there's a number of themes that I have felt will play a role this year. Expectations are very high for President Trump. Pro-growth policies, cutting back on regulation, wanting to drive the price of energy down by half, and so forth. The problem, I think, Kerry, is that expectations are likely to be disappointed for a period of time because all those things may have great value longer term, but it's going to take time to actually make progress, get them to be operational, if you will, in the real world for those benefits to show up. So I think one of the things early on this year potentially is going to be disappointment at how quickly some of the goals are going to be addressed.
Yeah, well, some things can be done by executive action, though, right?
They can. At the same time, I'll take the energy idea of cutting energy costs. And so President Trump is going to try to encourage and incentivize oil companies to produce more natural gas and oil. The problem is that over the last 5, 7, 8 years, oil companies have deviated from historically what they've done. Historically, you go back to prior 40 years, anytime oil prices were high, they aggressively increased exploration with that increased cash flow. And the net result, oil supply increased pretty dramatically. 3 to 5 years later, oil prices came down. In the last 5 years or so, the emphasis, Kerry, has been in not doing as much exploration, saving that cash flow and paying dividends and buying back stock. So shareholders were yelling at oil executives for a long time, telling them, don't be stupid, don't drill to drive the price of oil down. And they, in fact, have been doing that. So I think when President Trump asks them to increase exploration, I think they will. I just don't know that it's going to be to the extent that will bring oil prices down by 50%. So that is, again, some of the headwinds and just kind of a reality check that, has to be faced. And that, I think, as he was campaigning, bringing energy prices down was a big pitch to those who were most impacted by the high cost of living, lower income families and so forth. And I think they heard that pitch, Kerry, because that's why we saw a lot of people who had never voted for a Republican in their life voted for Trump on the notion that, okay, he's going to bring they don't think of it in cost of living. He's just going to make my life a little bit easier. My paycheck will stretch. Maybe my rent is going to come down. Food costs are going to come down. And I think that's part of the latent problem in that it's very difficult to accomplish that, especially in a 2-year window when we have midterm elections and historically the party in power loses seats. And right now, the Republicans, I think, have a majority in the House of 4 seats. So those are some of the challenges that I think are, kind of going to, come up during 2025 and, and counter to where the expectations are. I think that generates some disappointment.
Okay, well, normally I don't have any expectations or any hopes. It's always the same thing.
We're talking politicians, right?
Yeah. But we do have to confess that in 2016, Trump's first term, things were quite different. Now, what about this concept of the deep state? Because they seem to run everything. People you think are like totally normal or embedded in the deep state, and the idea of purging these people out, they've kind of kept the game running since World War II, I would say, at least.
For a long time. I mean, if you look at a lot of the agencies and the people that are been run by, President Biden passed more economically significant rules than any other administration in history. And an economically significant rule is anything that's going to cost over $100 million.
Yeah.
And so, what we have, to your point, there are embedded people that have been in these agencies for a long time. And so, you get rid of the top guy, but the philosophy of those who are working within that agency doesn't necessarily change just because you change the top 1 or 2 people. And so it really comes down to an embedded, philosophy of people who government should be doing more. And so one hallmark of the Biden administration was that the number of his agencies that were taken to court and then lost is extraordinary. So what we saw was Congress passes a rule on law. The agencies have some latitude in interpreting that law. And under President Biden, those agencies stretched the law so far that they got the wrist slapped in court. And so just because President Trump is going to try to make some of these changes, I just think the philosophy that has been embedded in these agencies for a long time is just going to be hard to completely eradicate. I mean, I think for a lot of these folks, it's like, well, we'll just wait you out, And I think that's the risk here, is that President Trump won a convincing campaign and election, but he's got, in my mind, a 2-year window.
Well,
and if he loses the House in 2 years, then all of a sudden, a lot of the things that he wants to get accomplished, Kerry, become that much more difficult.
So 2 interesting points here. The court overruled the Chevron doctrine, which said that courts have to defer to agencies when they pass new regulations and rules, and there's a presumption that they're proper and correct. And basically, that gives him the right to dismantle virtually 80% of the administrative state, because Congress creates these agencies, but then they never
go away.
Yeah, they pass the law that creates the agency, say, guys, you're on your own, have fun.
Right.
And now, normally the administration would have to justify rolling back the rules, so they'd put it out for public comment. Now they've got the basis to get rid of 80% of these regulations in many of these places, because they were all based on regulatory creep, the Chevron doctrine, and that's gone. And man, of course, the media doesn't report these the important stories the way they should. The other,
they're going to report that the Chevron reversal was a huge loss for the American people.
So just people think that country is diminishing, we're weakening, and I do think there's an argument to be made. but I've printed out a chart here. Do you know what the U.S.'s share of global GDP was in 2011?
It's a good, I'm going to guess 25%.
It was about 21%.
Okay.
Do you know what it was in 2024?
27%.
Oh, you're close. Better than me. Close to 26%. So the U.S.'s share of global GDP, and granted, that isn't the best marker,
Right.
but it's the only one we really have, has gone up almost 25% in 13 years, right?
Yeah.
So what does that tell you?
Well, it tells us that the United States has the capacity to innovate way more than Europe. As much as we have regulation in the United States, Europe is like in a class by themselves. And the net result is many companies are able to come up with a great idea and then turn it into reality that then creates jobs, improves productivity. And so that's the energy that needs to be retained. Again, that's a great statistic, Kerry, because it tells us more than one thing. Not only is U.S. doing well, but we're doing well in part because other countries have fallen behind. I think the ECB came up about 6 months ago, and I think it was Mario Draghi who was involved with doing this project of what do we need to change to become better? And one of the issues was we need to be able to roll back regulation. We need to open up markets and so forth. In other words, we need to follow the example of the U.S. So those are our tremendous strengths. The problem that I think is very important is the amount of debt that we're running every single year. So last year, the deficit was 6.4% of GDP. And for a lot of people, well, what does that actually mean? But to put it in perspective, Kerry, as you probably know, the only time the deficit has been above 6% of GDP was during World War II.
World War II, yeah.
The financial crisis of 2008, and the pandemic.
Yeah.
So, we had a really bad recession in 1982, 73, 74, long recessions. Guess what? We didn't even get close. Yes. So that shows how extraordinary the amount of government spending has been. And so the Treasury Secretary nominee, Besant, has said, well, we're going to cut that from 6.4 down to 3. That's one of our goals. It's the right goal. It's important it gets accomplished. But if you take away $1 trillion worth of spending, that represents 3% of GDP, the economy is going to slow as that is done. Now, they're hoping that by cutting regulation, improving incentives for investment and so forth, that they can offset some of that. It's just that I think the timing aspect is a little mismatched in the sense that as they cut the deficit, the improvement from regulation and so forth will take longer to completely manifest. And the other issue is, the economy has been growing about 2.5% or so. If we indeed slow, whether it's later this year, next year, it's going to be more difficult to get the deficit down. So my point is the goal of cutting the deficit is the right goal, except the economic repercussions are going to be a political liability. Because what will happen is if the economy starts to slow and starts growing under 2%, we'll be fed nonstop by Democrats in the media. Well, when President Biden was around, GDP was 2.5%. He handed off this wonderful economy. And that kind of stuff does weigh on how people perceive the reality. So it's I hope he's more successful than most people think he will be. I just think the challenges are really significant.
Well, if we pick up Canada, that should be a big boost to the economy, right? And Greenland, I think there's more to Greenland that they're really talking about. There's something there that's way more important than rare earth metals and, whatever. I think there's something
strategic. There's some
strategic. And it's strategic for sure. Like Panama now.
Now again, the media is going to make fun of them and all the rest of that for these ideas.
Of course.
But we'll see. Hopefully he can pull some of that stuff off. But for a lot of people who voted for President Trump, for them, it all matters is my rent, what's happening to my rent, what's happening to my energy costs, what's happening when I go to the grocery store. And that's where the rubber meets the road, Kerry. And that's where I think, I hope they focus on that. I'm sure they will. But that's the key, I think, in terms of what happens in 2 years with the midterm elections. And if you need a longer runway to accomplish some of the things that I think they're trying to accomplish so that they last a generation, not just this little blip. And I think so many companies have gone through the yin and yang of Democratic White House, Republican White House, philosophies go back and forth. And they're trying to bridge that volatility in terms of how they run their companies. So I think they've learned is I'm not going to lean too heavily one way or the other because in 4 years, this all can change. And, that's the reality that they've been forced to live by over the last 10, 15 years.
I will buy it. All right. So what's the stock market going to do here, Jim? This is what you spot on. And what's inflation going to be?
Yeah, well, I'll talk about inflation because right now, obviously, people are expecting inflation to go up, be difficult to come down because of the tariffs and so forth. The thing about the tariffs is it is a negotiating tool to bring people to the table and hopefully come to some kind of a compromise. So I don't think the tariff inflation aspect is going to be as bad as people are thinking. Number two, inflation is going to come down in the next 4 months. As you remember, in the first part of 2024, the first 4 months of inflation were really bad numbers. In fact, if you add up those first 4 months for the CPI and the Personal Consumption Expenditure Index, the PCE, it was 140 basis points. So the way they do the calculation on these things, Kerry, is they take away what happened 12 months ago and they add in what number comes now. So what we know is these inflation metrics are going to have a takeaway values of 140 basis points. So if each of these average month-to-month inflation of 0.25, well, that means you're taking away 140 and you're adding 100, which means almost all these metrics, I think by the time we get the last report in May for April inflation, we're going to see them decline by at least 0.4%. And so I think that's one of the counterpoint to where perceptions are today. I don't think the inflation problem is going to be as big as people are worried about. In terms of the equity market, the problem is valuations are incredibly stretched. 40% of the S&P's value is just the top 10 stocks. And so they've been pulling the market up. And I think at some point in time, NVIDIA and these other companies that are at the forefront of artificial intelligence, the growth rates are going to start to slow, and those companies are going to be vulnerable to fairly significant corrections. So my take has been the last month that we're going to see probably something close to a 10% correction come into play. And then it comes down to is if the S&P takes out 4950, then we're probably in a new bear market. So I think based on valuations, expectations, the advanced decline line has been lagging. Historically, that has been a really good tell prior to significant corrections and or bear market. So I'm pretty cautious in the near term, Kerry, because I think the market has there's more downside risk than upside potential at this point in time.
Okay. All right. I understand what you're saying. So one thing, I guess, a lot of it depends upon sentiment, right? So you basically think that the bullish sentiment's kind of going to peter out then, huh?
Yeah, I mean, in other words, it's just gotten excessive. And typically, again, I think the table is set for a retrenchment in that, all right, when President Trump takes office, he's got to get his cabinet through. There's going to be some bumps along the way. The trade negotiations are not going to go smoothly. I mean, think about it. If you're a politician of another country and now you're sitting down at the negotiating table with Trump, you need to have something that you can take back to your people to say, hey, I didn't roll over for Trump. I got us this. And I just think that's the reality. Now, Trump, I think, is very good at understanding that. And like, okay, you give me this, I'm happy to give you that. But it just takes time for all that to take place. So, again, I think expectations are so high that's a problem. The other thing that I think could be very significant is the dollar. People are of the mind that Trump's pro-growth policies are going to be bullish for the dollar. And to me, there are, again, a number of reasons why I take the opposite side of that. One is Trump is not in favor of a strong dollar.
Right.
If you look at
right?
Well, I would go against that. I mean, Robert Rubin in Clinton's administration was very sincere and consistent. A strong dollar is in the best interest of the United States. All right. So there have been times when, that has been supported. But my point is President Trump wants to strengthen the U.S. Well, if you have 30% of the revenue of S&P companies comes from international sales, well, a stronger dollar makes our prices less competitive with other competitors around the world. So a weaker dollar helps that. So I think somewhere in the not too distant future, those sentiments are going to get expressed. In theory, a strong dollar sounds good, but in reality, not so good. The other thing from a chart analysis, and this I go into the January macro tides, looking at the long-term picture of the dollar index, I think it's on the cusp of a decline that will take it below 95. So the dollar's trading up around 108, got up to 109. I think we're going to see a decline of about 15 points. And the reason, in part, is when the dollar hit its high in October of 22 at 114 and change, it then quickly dropped 15 points to 99 and change. And so to me, I just think that the synergy between a big decline followed by choppiness that we've seen over the last 2 years, and then another leg down. I think the fundamental story ties with what the technical picture is. So as long as the dollar doesn't close over, let's say 110, I think that's the outlook for the dollar. And, I think that has implications for obviously other markets. Historically, in the last handful of years, there's been a strong correlation between treasury yields and the dollar. So as yields went up, the dollar strengthened. When the dollar has pulled back, yields came down. So I think, right now the consensus is we're going to see yields keep going. I think there's a decent shot that treasury yields are in the process of topping out right now. And if I'm right about the economy 3-6 months from now, showing more signs of slowing, inflation remaining more under control than people expect, I think you can see a rally in treasury yields where they will drop below where they were in December of last year. In terms of TLT, which is the long bond ETF, it's got down below 85 today. I think we're near a trading low, and I think ultimately it's going to rally close to 105. So there's a trading opportunity, I think, developing there. And in gold, last but not least, I think it's in a bull market. In October, I turned kind of cautious negative in the sense of sentiment was very, very bullish. Positioning reflected that sentiment. And I said, I think we're going to see a decent sized pullback. And I believe gold will trade below 25.41, which is the last low that it hit of any significance in the last 4 to 6 weeks, and could trade down as low as 2,400. Once this correction is over, no matter where it ends, gold, I believe, will go to a new all-time high. So it's just a question of looking for an entry point after I think we see more weakness. From the low in gold in, I think it was in 2022, one up, two down. Wave two lasted about 4 months. And then the high at 27.89 would be wave three. And wave 4 and 2 have often a similarity in terms of time. So my guess, Kerry, is that this correction can last into mid-February, maybe into mid-March time-wise.
So it's a correction, not a bear market.
Absolutely. Yeah, I think, again, if I'm right about the dollar, working its way lower over the next 12 months or so to 95, that would be a big tailwind, I think, for gold.
Yeah. Yeah, could see that. And yeah, I tend to agree that you're thinking right on this. So, all right.
Well, hopefully two great minds burning in a small circle.
Yeah, well, the smaller the better, right?
Yeah, right. So we look like a dot.
Yeah. No, I got you. So, all right. Well, just macrotides.com, write to Jim, get a free copy. Tell us your email address again, Jim.
Jim Welsh, macro at Gmail.
Okay, Jim Welsh, macro at gmail.com. And if you got any questions, comments for Jen, myself, shoot me an email, kl@kerrylutz.com. You find a link to macrotides.com in the show notes to this interview on financialsurvivalnetwork.com. We just ask while you're there, you please sign up for your free email newsletter. It goes out roughly weekly. I've been pretty faithful on it for years now. And like I said, it's free. Sign up for it. Join over 65,000 other FSN community members who receive it. And amazingly enough, over 40% of you out there, nearly 40%, I think it was like 38.9, the last one I sent out, actually opened it and read some of it. So it's good to know that reading is not yet dead. Jim, a pleasure. Happy and healthy New Year to you and yours. We'll talk to you again real soon.
Thanks, Terry. Enjoy our conversation.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.